You're listening to Sound Money from Casey Research.
Hello and welcome to the show with me, Andy Duncan, in London in the UK. Today my guest is Peter Spina, the president and CEO of goldseek.com, and he's coming to us from Vancouver. Today we'll be comparing the investment potential of silver and gold, we'll be examining the US economy, and we're going to speculate on the possibility of the Federal Reserve actually tapering. Hello, Peter.
Hello, Andy. Thank you for having me on.
Our pleasure. Now, in Doug Casey's recent book, Right on the Money, he sees gold's kind of relatively low current price as a buying opportunity rather than something to be kind of depressed about. What's your position on that?
I concur. I believe this is a buying opportunity as well. This is there's more upside risk to the price than there is downside risk at these levels. And I believe we're working through the last part of this consolidation phase that's been going on for the last year plus. And it's getting to the point I think we may have been hit a bottom, or we're really close to a bottom in the gold price.
And when do you think it's going to start going up?
I don't know if we'll see an immediate recovery in the gold prices at this moment. There are a lot of triggers on the sideline that could get it going, including this overwhelming demand coming from Asia. One of the key factors there is what will happen in India. We've got elections coming up in near mid-year of this year, and there's been calls even this morning for a repeal of this strong import tax. So if India were to come back online, their demand combined with China and the rest of the world's physical demand, that could be quite a strong trigger to get this price really rallying. Under the current conditions, I could see it kind of drifting higher, maybe bottoming out for the coming months, and it might be that kind of a bottoming process for the next half a year.
Now, we have all sorts of conflicting rumours about India. So some people say the import tax is going to come off. But I've seen some rumours recently that the Indian government is considering trying to confiscate the 25,000 tonnes of gold held in private hands, which might be worth about $1 trillion. Do you think this confiscation plan might come into play? And if it does, do you think they'll be able to find the gold?
Well, the gold, it definitely exists. There's a very large amount of gold being held by private citizens and then by various cultures in their temples and so on. And India has instructed these various places to report how much gold they have. But to report it is one thing. To take it and have them agree to hand it over is another. And they may find a couple sources. I don't know, maybe they find several hundred tons or a couple thousand tons of gold that would participate in some sort of transfer, but I highly doubt that this is really going to bode well. The culture there is to buy gold for an investment for long-term perspectives because they do not trust in the currency, and they have experienced that in the past. So I don't believe that it will be an easy task for them if they try to do so, and they would have to get a lot more aggressive for that to happen, which I don't believe will be the case.
Yeah, they're going to have a hard time finding it as well, aren't they? It's going to be buried in a lot of difficult places. Coming back to the Western world, some might say that gold's been caught in a kind of Mexican standoff between the Federal Reserve constantly saying it's about to taper and a booming stock market. Now, do you think that this year Janet Yellen might actually taper, or is it just kind of smoke in the wind?
They may reduce it a bit more. I don't believe they can go too deep because they are kind of in a catch-22. If they let go of all this buying, then you'll have treasury rates surging, and they won't be able to control the long end of the yield. On that would create all sorts of problems. The fact that they can manage $17.5 trillion in debt at these lower prices is what's keeping this liquidity game going. But on the other hand, too, you've got trillions of dollars sitting on various banks' balance sheets. It's sitting there. They have that multiplier effect from fractional banking, which if they were able to push that money into the system, could really see some compounding effects. So I think they're hoping that the commercial loans will start to kick in and they can start pushing money through the system that way. But overall, I think they're going to be limited to how much tapering they can do.
Do you think there'll come a point where people just stop believing anything the Fed says and just completely ignore these kind of tapering rumors?
That's a big, one day you may just not believe in, and that's really, I think, the key here is when you look at the value of the U.S. dollar, a lot of it is the faith and trust in the U.S. dollar. So, like you said, if one day people wake up and they say, "Oh, I don't really trust this anymore. I don't believe that I'm going to get repaid fairly on these treasury bonds or whatnot." I mean, it could turn quickly into a panic, and those are one of the triggers that exist on the sidelines that you can't really predict when something like that can occur. But when it does, it can be very quick. And at that point, gold would rally in such a quick manner that you're either in the market or you're going to be watching it move $100, $200 a day moves up on the upside. It's such a tiny and small market that when the capital really does flow back into the gold market aggressively, it's going to be overwhelming.
Do you have a probable timeline for this, or is crystal ball gazing not something you do?
I think overall, it's something like seeing the U.S. dollar go into some sort of free fall in the short term doesn't seem plausible. Things seem to be still pretty well in control. There's optimism, and the general mainstream crowd seems to be happy with new record highs in the financial markets and other financial bubbles that the Fed's been creating. So there's a sense of calm, and the reduction of fear is really low right now. So it may take some time for this to kind of unravel. There's other threats to the U.S. dollar, including the Chinese yuan, that with their attempt to make that a global currency as well in a competition to the U.S. dollar, that'll be a threat coming up as well. But overall, I think in the coming years, the U.S. dollar is bound to have some downside to it as all this printing and easy money undermines its value. So.
Coming on to China, some people say that they are actually encouraging their citizens to buy gold so that they can create a new kind of reserve currency, the kind of global yuan. Some people say it's a ridiculous idea because politicians never willingly and voluntarily constrain themselves with something like a gold standard. Do you think the Chinese are trying to create a gold-backed currency?
I believe they are, to legitimize their currency, to back their currency, to build reputation and trust in the international community. Gold is part of that plan. And like what you said right now, that the Chinese government is encouraging its private citizens, the citizens to own privately gold, that's a huge, I mean, to me, it's almost unbelievable to think that here in the Western world, we're dissuaded from owning gold and silver in many ways through taxes and through general just comments from the authorities and the bureaucracy, whereas in China, the government's encouraging its populace to buy gold. I think that's all part of the plan to compete with the U.S. dollar. So, in all attempts possible to accumulate as much gold as possible through private and through central ownership in China. So I think in the coming, we've reached this 5-year point where they announced their updated numbers, their 5-year plans. We should get an updated amount of gold that's being held by the Chinese. And if you look at the imports coming through Hong Kong in the last year, there's been some incredible numbers. We've had months over 100 tons of gold per month. So we may see gold, the official reserves in China go from 1,000 to 2,000 tons of gold, and that could double or even more in this update, which is likely this year.
Now, I've heard rumours that the Chinese might actually be spending up to $2,000 an ounce to get gold out of the ground to put it into their Chinese vaults. Do you think those rumours are credible, or is that just the internet going mad?
Well, they are a communist regime. Having my family come from a background of communism in Czechoslovakia and seeing how they manage business and economics there, they tend to subsidize things and have a lot of inefficiencies, and I wouldn't be surprised their cost of production is quite high. So that would not be surprising to me. If the average in the West here is $1,200, $1,300 an ounce, all in cash or all in production cost, it might be, but that's something I haven't really looked into.
Now, before we get off government influences on the gold price, the German government has only received 5 tons of gold from the Federal Reserve when it wants back something like 684. Do you think there's some link between this slowness of delivery back from the Fed and Deutsche Bank's recent decision to come off the LBMA gold fixing committee?
Well, their chief financial banking regulators said that, he's suspicious, and that the gold market is not truly free, that the price is being manipulated. And we have recent scandals like the LIBOR rate scandal, and we look at these other markets and assume they're manipulated. And a lot of people look at the gold market and assume that it isn't manipulated, but I believe situations like this, what's happening in Germany, and things that are starting to come out are starting to show that the gold price isn't being properly set by the markets, that it's not free. Now, the fact that they can't get their gold out in a faster manner, it raises a lot of questions. Why is it taking so long? This is not a huge amount of gold. It's almost a joke that that little amount of gold was received last year, and they're not expecting a lot more of this coming year. So what happened? Where is that gold? And this goes back to the Gold Antitrust Action Community's work in the past, that they believe that the gold that is in the vaults in the West has other claims on it, and that might be, part of it. It's almost unbelievable to think that that could be true, that Germany's gold has been sold or leased out in the market, and it's going to take several years for that to come back. That if that got out, that would be one of those triggers that would send gold absolutely through the roof. So it's something to closely watch, and I remain very suspicious. There's just so much secrecy to that whole process, and there's a lot of questions coming out of it. So it's something to definitely watch out for.
And do you have a target price for gold? Once it does start lifting off, where do you think it will reach before it plateaus out again?
I think the upside in the short term, we've had a bit of a breakout today above the 1255, 1260 mark. It looks like 1280, then in the low 1300s, it might have some technical resistance. But beyond that, once you get above those levels, you can look at $1,500 to $1,600 before you might have some more kind of sideways trading. But you have a lot of short positions out there. You have almost an 8-year record high in the amount of short positions on the COMEX. So you could get a real big short covering rally in these markets, and the gold stocks along with that. There's a huge amount of short positions out there. So one of these rallies from the bottom is going to really build momentum, and this might be it right now, where we extend gains very quickly and then see it, like you were just mentioning, settling a couple $100 from here, and then from there get some turnover before moving higher from there.
Now, moving on from gold, there's been a big kind of libertarian debate recently between the merits of gold versus Bitcoin. But do you think we might have actually missed the big elephant in the room, which is silver? Do you think silver is actually a better opportunity than either gold or Bitcoin?
I believe that silver is a better opportunity than gold right now. The ratio being in the low to mid 60s, so 60 ounces of silver for 1 ounce of gold, historically is quite high. We peaked in the low 30s when silver hit $50 an ounce, and in this recent fall, silver has fallen about twice as fast, twice as much as gold has. And that, to me, at these levels, under $20, around $20 an ounce, looks a lot more attractive than gold does. Bitcoin, well, that thing is a wild market that can move 50% or double in a day. I'm not sure if the highest levels in that market's been hit. One thing about Bitcoin that I do like is that it's awakening people. It's making people question what is money. When you look at Bitcoin, a lot of questions is, well, there's nothing backing it. Well, look at the U.S. dollar. What's backing that? And so it's quite interesting, the debate and the questions that's bringing up. But ultimately, I still believe in precious metals. It's tangible. It's real. And silver, to me, is quite attractive at these levels. I'm a buyer right now.
Yeah, Bitcoin does lack Aristotle's intrinsic value kind of qualification for money, but it's actually better than most fiat currencies, isn't it? Now, with silver, the magic price is $50 an ounce, which comes from the Hunt Brother days back in the 70s and 80s. Do you think we're going to see that target being reached within, say, a year to 18 months, or will we have to wait a few years before we get to $50 an ounce?
Silver looks like it could move easily back to the mid to upper 20s, around $30, even low 30s in the coming year on a nice rally. Or it might need to consolidate in the 20s for a bit longer. But to get back to 50, that technically it looks like it needs more work. It needs some more triggers. If we're going to have a global economic slowdown, the industrial demand may slack. It may take some time for the investment demand to overwhelm and pick up that extra supply in the market. But we have a lot of you look at the amount of investment demand in the silver market, it's just a tiny amount of money in the global realm of all this easy money floating out there. So again, it's another market where a little bit of capital coming into it, a little bit of interest can really send it higher. I believe we'll hit $50 again. I believe we'll break past that level, but that's probably a good year to 2 years out, in my view.
Okay, I just wanted to leave you with one last big economic question. Now, the reason money printing's been going on since 2008, I don't want to call it quantitative easing, it's money printing, has been to prop up the banks, and that has been in turn to prop up the US economy. Do you think that this has worked? Has this money printing been medicine, which has helped a sick kind of person get over the disease, and the person will be coming back soon, sort of fighting and kicking? Or do you think all this money printing has been a kind of poison which has prevented the clear out of a kind of necessary clear out of malinvestments?
I believe that it's been successful in delaying the inevitable, but it's also been successful in making a bad situation even worse. And like you said, it's a poison. It hasn't allowed the free market system to get rid of the excesses. So by trying to reinflate the stock market and the real estate market and just create such distortions in the free market prices, no one really knows what the true prices are. In all markets, they are so volatile. The function of the free markets has been destroyed and manipulated and interfered with. So now we've got all this capital going to various different markets that it wouldn't be there if it wasn't for the interference by these central authorities. So they've done a great job of making of creating this period of calm and these trillions of dollars, but the investment is not showing itself. It's I'm sad that we haven't been able to use this time to correct, naturally these problems, get rid of debt, and create more of a healthy economy. But instead, they've just been flooding the system with all this cheap money and paper, and I think the consequences of that are going to be felt a lot, in the near future. And it's going to be a lot worse than it would have been if they would have let this correct in 2008 naturally.
This brings us back to Doug Casey's point that when you're speculating, what you're doing is taking advantage of all these government-produced distortions. Now, goldseek.com, what kind of services, briefly, can you offer our listeners?
Sure. We started the site about 20 years ago, and we cover the gold and silver markets on Goldseek and silverseek.com. We have a lot of various contributors, including the Casey Group. So we cover the latest news and headlines on the site, the prices, and also gold and silver mining companies.
Well, it's been great talking to you today, Peter. Thank you very much for your time.
Thank you very much.
You can subscribe to Sound Money on iTunes or sign up to our subscription service at soundmoneyshow.com, where you can also listen to our growing catalogue of podcasts, which include interviews with Doug Casey, Rick Rule, Jeff Tucker, and Jim Rogers. Thank you to Peter Spina for joining us today, and thank you for listening. Until next time, goodbye.